Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is July 4th, 2017. Happy Independence Day. Our newsletter is for your informational purpose only. We're not responsible for your gains or losses. Let's take a look at current market trend and our strategy. US stock market is in correction. It broke down with a high volume. I have already stopped out and I'm waiting for one of the two things to happen before get back in. One thing is the market might have a panic sell-off. Then I would try to get in to catch the rebound. Or the market just reversed the downtrend and started going back up again. Then I will start it long the stocks and index ETF. For now, I'm out of the market. Let's take a look at the market indices. A German DAX index broke down 50-day moving average for a very long time. Since last December, it has been above 50-day moving average, but now it's breaking down. NASDAQ did the same, and since last November, it has not balanced 50-day moving average, but recently it came down, and the volume is pretty high. So we have to be very cautious, and also the recent peak was lower than the previous peak. So market just couldn't reach the previous high and came down. That's a sell-off. That's an institution sell-off. We just wait for what market is going to do next. It could continue go down with a panic sell-off. That's when you're getting. Or it can just rebound back up that you can still go back to long again if it rebound from the if it's just reverse this downtrend, go back up. That's another signal. You can go back again. SP 500 did better than the Nasdaq. SP 500 is still above 50-day moving average, but this short-term trend is still come down. Gold really sold off, broke 200-day moving average. It's approaching previous low. Silver also sold off, and gold mining stock ETF sold off, came down. So this is all coming to the downtrend. Crude oil rebounded, but right now it's hitting the 50-day moving average resistance level. QQQ is a Nasdaq ETF. As you can see, this is also sold off below 50-day moving average. Semiconductor ETF came down. This peak did not meet the previous high and came down, broke 50-day moving average. So the near term is going to the downtrend. Volume is high as it sold off. Social media network, social media index ETF, and it also came down, and right now it's sitting right at the 50-day moving average, but it has a potential to roll lower to the downside. Those social media index ETF and semiconductor ETF, those are the very strong performance. Both of them right now are not doing very well. So that tells us the whole sector, the market as a whole, is not doing great right now. So what to do in this market? It's better to stay out for now. And if one of the two things happen in next near few days or next week, we can get back in. And if it's sold off, if the market sell off with a huge volume and just a panic sell off, that is a day I probably will buy a little bit of the stock or ETF, index ETF. That's better than buying stock to catch the rebound. But if the market will not sell off, and in next few days it may reverse the downtrend and go back up again with a high volume, then I will buy again. But if none of those two things happen, market just day in day out just came down a little bit every day without panic sell off, then it's also hard to go long, and it just stay on the sideline would be better for now. That'll be all for this week, and see you next week.